Well, guys. How are we doing? It's really good to see you all again. I can't actually see you, but I see that a few of you are here. Welcome back. It's been a while. This is Office Hours, presented by TrendSpider. My name is Jason Krutzky, and it is a great pleasure to be back with you. I've been hard at work for the past couple of weeks on a big project for the team, and so I have had to neglect my little baby Office Hours, but we are back and I'm excited to be here. If you guys have not been paying attention to releases from us over the past couple of weeks, man, you have been missing out on some things because we have been bringing some really interesting, really cool, really helpful new tools to the platform. So I thought that maybe I could spend today kind of going over what's up, what's been up, what we've been releasing. Presumably some of you that are tuned in already are aware of things like variance strategy testing and the new dashboards that we've got. We just launched a handful of new analyst indicators on Friday, or maybe it was Saturday. I can't remember. It was this weekend. So I figured I'd take the day or take the time today and go over all of those things with you. Kind of want to focus on the strategy variance tester first, if that's okay with y'all. Before I get started, though, talking about what I want to talk about, what do you guys want to talk about? I know there are a few of you here. So if anybody has anything in particular that they wanted, that they're tuned in specifically to get answered, I will put that in the forefront. I will answer any questions that you guys have first before I start talking about new features on the platform. But I do definitely want to spend some time with those new features because they're really cool. The strategy variance tester in particular is kind of crazy how powerful it is. I think if you haven't played around with it yet, I think you're going to find it really interesting. But I'm going to open up the floor very, very briefly for you guys. Like I said, there are a few of you here. Please say hello. Let me know who's here, who's tuned in. And if you have specific questions about the platform that you were looking to get answered today, please hit me with those right now so that I can answer them. And then we can kind of talk about these other tools. Hopefully everybody's been doing good. Markets have been ripping, you know, like all things even. Hopefully some of you guys have been in crypto over the past month since I've been gone. Crypto's been amazing. Let me do something here real quick. So what do we think? Does anybody have anything? Nobody's saying hello or introducing themselves? None of that yet? Since no questions have come in just yet, I'm probably just going to jump right into the strategy variance tester. Hopefully that's okay. Yeah, we're going to do it. Okay. So strategy variance testing. We all know about strategy testing. We know where it is. It's right here. Oh no, you guys can't see me. Hold up. Okay, never mind. No, you can. Sorry. So just for the sake of kind of explaining how this tool works, I'm going to keep things very, very simple. What's up? There's some people. David, what's happening? Michael, how are you? Hopefully you guys are well. So I'm going to keep this very simple. I'm just going to do like a very basic 8 SMA, cross up, 21 SMA. Actually, let's use EMAs. And I'm just using the GPT conditions for this. We're going to add a script here. 8 EMA crossed down, 21 EMA. Say apply. What's up, Haverell? What's up, JE? All right, cool. So what we got here, we've got this is just a very, very basic 821 EMA cross. Nothing super special about this. The only reason I'm using this, and I'll go ahead and throw this up too, moving average cloud. We'll make this the EMAs. We'll make this the 8. We'll make this the 21. And like I say, I'm just using this to show, just as a very, very basic example. I'm not trying to build some fancy strategy here. Just trying to create a very simple basic strategy. Clearly, this one doesn't really work all that great. 149% return versus 577% return over the same period of time. We're testing the SPY daily here. What strategy variance testing allows us to do, it allows us to take... What's up, Gary? How's it going, man? It allows us to take our strategy ideas and just like really expand upon them. So like in this example, it works, you know, it doesn't beat buy and hold by any means. It does okay. There's no-go highlighting. If you guys are, hopefully you guys are a little bit familiar with the strategy tester. So no-go highlighting. So it's like a relatively safe strategy to run, even though it doesn't really outperform the asset in any way. But if we wanted to try and find ways that it could outperform, or we wanted to try and test this on different time frames or what have you, historically we would have had to go in and change things individually. So I'm changing the time frame here to 2 hours, and it's going to rerun the test, and we're going to get some results back, and maybe it does okay. Yeah, so it does okay. And over here on the right hand side within our tabular data, we see the data points that have changed, and in some cases the numbers have gone down. So like right here, positions, 153 positions. So this little negative, or this down 3, means that we've taken 3 less positions than we did on the daily. And with our max drawdown has decreased by 19.3%. Our average win has decreased by 2.4%, and so on. So these values tell me the difference from this strategy, the performance of this strategy, to the performance on the previous time frame that I just utilized. Well, that's great, but variance testing allows us to take that and expand out. So I'm going to turn on the Variance Explorer here. And instead of just testing one time frame at a time, what I'm going to do is I'm going to test a bunch of them at once. I'm going to test maybe the 10-minute and the 15-minute and the hourly and the 2-hour and the 4-hour and the daily and the weekly, right? And I can pick, you can utilize up to 30 variants. So depending on how you want to splice and dice your 30 variants. So you could say maybe 10 time frames, or maybe 15 time frames on a single asset. Or maybe 10 time frames on 3 assets, right? That gets you to 30 variants. But splice and dice it however you want. You can, for the time being, I'm just going to keep it simple and just use time frames. And then we can kind of expand upon that here. So we got to pick our little strategy. Let me see. I think I have this saved. Since I've opened up the Variance Explorer here, it's now I need to pick a new strategy. It's not just going to strategy test the strategy that I just made. So actually I may need to go back and remake it really quickly. I kind of thought I had an 821 EMA cross, but I might not. Okay, so let me do this really quick. Let me go back to here. I'm going to call this 821 EMA bullish. Actually, let's do this and say save. So now I can go to Variance Explorer, and now since I've saved it, it's the strategy that's selected. Oh, there was one there. And now again, I'm just going to repick the time frames. We'll say the 5, the 10, the 15, the 30, the hourly, the 90, the 2-hour, the 4-hour, the daily, the weekly. So this is what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 time frames up to 5,000 candles back. I'm testing it on the SPY. I say compute, and it just runs all of those tests for me at once. I don't have to do any sort of math to kind of like figure out, well, this one did better than that one. I don't need to build my own spreadsheet. It just does it. Before we talk about these results, let me see here, Gary, not to disrupt your flow. If you create a watch list and update it, if someone imports the watch list and subscribes to it, does it update with your new updates? Yes. The answer is yes. Okay, so now we've got all of this data on all of these time frames, and how do we read it? I mean, the first and most obvious piece here, there's kind of like 3 sections that we're seeing. We're seeing the time frames. We're seeing what we're testing here. What we're testing relates to, you see how when we hover over everything that we test, it highlights the bubbles down here in these bubbles charts that represent that particular time frame. And then if you scroll right over to the right, all these values represent the time frame over here, represent the strategy. If you're utilizing multiple strategies or you're utilizing the same strategy on multiple assets, what have you. So every single one of these, you're getting a green highlight for kind of like the best performing result of all of the results. So net performance, this is the performance of the strategy over the same period of time per the time frame. So very quickly, we can see that this strategy happens to work best on the weekly time frame for SPY of the bunch. Now, it is relative to all of the other returns, right? So 512% on the weekly time frame, 5,000 candles. I'm not sure how much time that is. That's a lot of time, 52 weeks a year. So what? I don't know. It's a lot of candles. But still, it's giving you that idea of your total return for each strategy or for the strategy on each time frame, and you can kind of make that comparison for whatever makes sense for you. Like on the 4 hour here, 71% return versus 173% over that same period of time, buy and hold. And you can kind of, if you scroll to the right, you're going to get things like the risk to reward ratio. So clearly risk to reward ratio on this weekly, on the weekly time frame of this particular strategy, this is the best risk to reward ratio of the bunch as well. You're not always going to see this where the return, the net return is better than, or is also, the risk to reward and the net return are both in the top slot for one particular time frame. But it's interesting to see it if that time frame makes sense for you, whatever. I think the thing to understand about all of this is like there isn't like a right or a wrong thing to choose here. It's just giving you all the data so that you can kind of analyze all the data without having to do a bunch of testing and then delineating a bunch of notes to all of the testing that you're doing. You can very quickly and easily see what has the least max drawdown, what has the best average return, what has the best risk to reward ratio. And then down in the bottom here, you have these bubble charts. These bubble charts, admittedly, they are a bit, they're thorough. I'm not going to say they're like super difficult to understand, but it can be maybe a little tricky to understand. They work on a gradient. So you have essentially like orange and you have green, and then you have a gradient in between orange and green. So the brightest green, the brightest orange, those are going to be like the best results. The bright greens are going to be the best results per the things that you are comparing. Now you can compare all kinds of things in these individual charts. They're preset to like risk to reward versus win rate and then total positions, right? But I can come in here and I could change any of this stuff. What I would kind of recommend if you're just getting started using this and you're not really sure how, don't change anything in these drop-down menus. They are pre-built with kind of simplicity in mind and with kind of giving you a broad overview of kind of what's the best strategy or time frame or asset, whatever. They're pre-built to kind of give you what might be maybe the best way to go, the best direction to choose based on all of your results. So risk to reward versus your win rate. The bubble radius is the size of the bubble, and this is the amount of positions. So you can see that the weekly kind of takes less positions than most of these, but has the best ratio of win rate and risk to reward. So make sure that you understand what's going on the axes as well, right? You have the risk to reward ratio is the y-axis, your x-axis is the win, the number of wins, like total positive trades, winning trades. So in this particular case, you're looking for a high win rate or a high amount of wins and a high risk to reward ratio. You want, when you win, you want to have a high risk to reward ratio because you're just returning, the returns are greater per whatever you're risking. So a bubble in the upper right-hand corner is going to be more favorable than a bubble in the upper left-hand corner. In the upper left-hand corner, you have quite a few wins, an equal amount of wins, right? As you do here on this weekly time frame. However, your risk to reward ratio is quite lower. So just because you're winning as much, but you're winning less when you do win. So that's what makes these time frames less favorable. You've got, for this particular bubble chart, you have this red risk to reward curve. Any time frames that live like within the red risk to reward curve are going to be just no go. Don't touch them. Don't trade them. They're lousy. They're lousy win rates and lousy returns when you do win. So they're not worth anything along the curve is kind of going to be a little meh. You're looking for things outside of the curve and specifically bubbles that are up into the right. Now, this is not always the case. If you change either of these axes, then where you want the optimal bubble to be is going to be dependent on what you change your axes to. So that's why I say, like, as you're first getting used to this tool, keep it simple. Don't go changing a bunch of stuff. Just leave all this stuff exactly how it is. That will make things easier for you. On the second one, you've got average return and then return standard deviation. So that means the deviation between your returns. Like one return you get 5%, the next return you get 1%, the next return you get 12%, the next return you get -7%, right? There's a big deviation between those four things. Whereas, if you often, on one trade you get 3.5, on another trade you get 3.2, on another trade you get 4.1, the deviation between those returns is smaller. So that's kind of what that return deviation represents. And then your average return is just that. It's the percentage that you get in return on average. And then max drawdown of the strategy versus max drawdown of the asset. The bubble radius is constant here, so all the bubbles are the same size. You want to be drawing down on your strategy. You want to draw down less than the asset tends to draw down over the same period of time, right? So your max drawdown on a 5-minute time frame is -2.5. Your max drawdown of the asset over that same period of time is 2.5. So you're like even there, right? If your strategy was drawing down 5% and on average the asset drew down 2% over that same period of time, then you know that your strategy, it's just not jiving with what the asset is doing. And we can kind of see it here. Well, I guess it's a little different here. Like in this particular case, the max drawdown of the strategy is -33.3. The max drawdown of the asset, -56.5. So, your strategy in that way is avoiding some of the max drawdown that the asset is experiencing during that same period. But really the goal here is to kind of be really down and to the right, Because you want your strategy to draw down as little as you can, even if the asset is drawing down a lot. You want your strategy to protect that. So the down in the bottom right-hand corner is kind of more the optimal place to be, I guess, for this particular bubble chart. Now, not every time frame not every strategy, not every asset is going to give you bubbles that are down in the bottom right-hand corner, but that's how you can kind of like be thinking about this. And again, once you understand kind of the basics of what each bubble chart is measuring, then you can kind of think a little bit farther outside the box and go into what do I want to measure? What things matter to me, I guess, is kind of how you can think about it. And you can start creating your own bubble charts that make sense for the things that you're interested in. So that's one way that you can utilize this Variance Explorer, is just test a bunch of different time frames, presuming you have a strategy that you really, really like. I could go in here if I wanted to, and I could add the Qs and I could add IWM, because remember, I only am using what I'm using 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So I'm using 10 time frames. So because I'm allowed 30 variants, now I could test the SPY, the Qs, and the IWM on all of these time frames for this particular strategy. It's going to let me do it. That's 30 variants. And now here they are. And I can, again, very quickly kind of see what works, what doesn't work. I need to zoom out here so we can kind of see this, what's going on. The Qs on the weekly, best performer of all of those 30 tests, has the best return over that same period of time. Again, you know, we could go down the list here and look at risk reward. We could look at max drawdown. You know, with max drawdown, I tend to like to look for strategies that avoid 20% drawdowns. So the reason why I kind of say that, or the reason why I look for that, is if you're creating a strategy to employ or to deploy for a long period of time, or potentially a long period of time, and you just want to use the bots to just let it trade and do its own thing, you kind of want to be avoiding any really scary drawdowns. I think anything over 20% is pretty scary. So I look for strategies that have a max drawdown that is less than negative, or I guess greater than negative 20%. So some of these I would, you know, forego. Some of these I wouldn't touch. This one right here has a max drawdown on the strategy of 35%, negative 35.6%. So like I would just, for me, that would be a non-starter. I wouldn't utilize this name on this time frame, this set of conditions. But there are other ones that, you know, might work kind of well. So we just need to go in and kind of look and see. I could take this, though, a step farther if I wanted to. Let's say I whittled down a particular time frame that I wanted to trade. Maybe I want to trade the 15-minute, just keep it like real simple, or maybe the 15-minute in the daily, and I want to utilize those 3 assets, but I want to test other strategies. You know, I don't know, maybe I have this 520 cross here, I got this 512 cross, we could, you know, I could pick whatever, golden cross. I'm just looking for really, really simple stuff, so keep that in mind. We're not doing anything crazy here. I'm not looking for strategies that actually work. I'm just showing you what is possible. So here I've got 5 strategies. 1, 2, 3, 4, 5 strategies on 2 time frames with 3 assets. What is that? So that's 30. That's your 30 variants. So I can compute, excuse me. And so now, again, same idea. I've got all these different strategies on all these different time frames. So 5 different strategies on 2 different time frames for 3 different names. And again, it's just that idea of being able to do this all at once. I don't have to go and test. This would have taken, you know, this would have taken 30 tests previously to do. And to understand the difference between all of the results, I would have had to write them all down and like do a bunch of math to figure out what is best. And with this, I can just see it very, very quickly right here in front of my face. And I can know, okay, well, of the bunch, the Qs on the daily, the golden cross on the daily, of these 30 different options that I'm testing, daily golden cross on the Qs has the highest return. It has the highest average return. It has the highest risk to reward ratio. If I was just like, you know, throwing a dart and I had to pick of these 30 things to trade, well, I'd probably go with that golden cross daily on the Qs, because the math is telling me that this is the best performing thing that I could pick. And if I wanted to, again, like I say, I could go and I could look at this one. Like, here's your 520 cross on the daily on the SPY. This thing performs pretty decent. Not very good relative to the asset over the same period of time, but pretty good relative to the rest of the performance of all the other strategies. So this might be one to kind of dig into a little bit to figure out, like, well, maybe I could do some things to adjust it and kick up those returns. That's kind of the idea behind this tool, is not just to necessarily show you, pinpoint, do this, but to say, all right, well, of all of these ideas that I have, these clearly are the ones that seem to work the best. So I could focus on those and I could try and optimize those for whatever it is that I'm looking to do. Or maybe I wanted to go in and like try different time frames, like go back and try this this 520 SMA cross on the QQQ here. Maybe I want to test a bunch of across a bunch of different time frames and see, well, all right, I know the daily does okay. Maybe I could check and see if XYZ time frames work. So that's strategy variance exploring in a very small nutshell, in a very quick 20-minute nutshell. Hopefully that's helpful for some of you guys. If anybody has any questions about anything, do let me know. I'm happy to talk through whatever you guys want to talk through. The second thing that we added here were the dashboards. So I created a handful of dashboards that we shared. If anybody read the blog on the dashboards, you saw these guys, the Mag 7, the Idea Generator, the Fundamental Fanboy. Hold on one sec. Let's see here. We got some questions. Very cool. Isn't there a risk of overfitting a strategy by relying so heavily on historical data? Of course, Haverell, 100%. Yeah. You have to be very careful of that. And, you know, when you think about when I think about overfitting strategies, if we're just testing something as simple as a golden cross on the daily on the Qs, that's not, I don't know. I don't think that you're like overfitting there. You're looking back 5,000 candles on the daily. That's what, it's more than 10 years. It's like 17 years of data or something. Markets tend to go up over time. A very, very basic moving average cross like the golden cross is going to probably not deviate a whole heck of a lot looking out into the future. I would anticipate the returns to stay relatively similar, especially over extended periods of time for something very basic like that we know that lots of people are watching. We know that lots of hedge funds and managers and things are utilizing very basic items like the 200-day moving average to decide if they want to be in stocks or out of stocks, right? So with something like a golden cross, I wouldn't consider that overfitting. If you're using a 15-minute time frame and you're using, 6 indicators with a stop loss value and a take profit value and maybe even like a trailing stop of some kind, then you start getting into potentially the overfitting scenario. And you just got to be careful because market conditions change, right? Especially on kind of these lower time frames. Things can bullish scenarios can kind of work better during certain periods, whereas bearish scenarios or bearish setups can work better during certain periods. So you do got to be mindful of the market that you're in, especially as you're getting into lower time frames. You do need to be a little bit more cognizant of that overfitting, of overfitting. Generally speaking, the bigger the time frame, the farther back you're testing, the less I'm personally concerned with the idea of overfitting. But that's just me. I think, kind of play around with it. Where's the disclaimer? Yeah, that's right. I mean, that is the disclaimer, right? Past performance doesn't indicate future returns. And that's going to be true across the board. Anything could happen today and cause a setup that's been working great to stop working. But generally speaking, I think as you get into lower time frames with more conditions and more, more finessing to get a strategy to a place where it's working well, that's where things start getting tricky. So I think just be really careful of that when it comes to overfitting. But anyway, so getting back to the dashboards, when you, let me show you this. So up here in the top right corner, this is kind of a brand new little button that's available. It's been available for about a month now, but we haven't talked about it yet. So this button will take you to all of your workspaces. Ooh, hold on. Seems like all the logic to have the system automatically compute and determine the best EMA and time frame combination is in place. That's right. Yes, Haverell, you have that's the idea. The idea is simply to give you a bunch of stats at once, as opposed to one time frame, one time frame, one strategy, one ticker. Instead of just one time frame, one strategy, one ticker, we're giving you the option of, all right, well, I know this strategy works on Tesla. How does it work on Apple, Amazon, Google, Meta, whatever? you can do things like that. Or I know this strategy works on the 2-hour on Google. How does it work on the 5-minute, 15-minute, hourly, 4-hour daily, right? It's just allowing you to expand that understanding out a little bit, because if you find something that works, you might have something that works on a bunch of names and you don't know it because you didn't test it. And it may work better on something else, right? So this is your quick and dirty way of kind of finding the optimal place or time frame or ticker or strategy, right? It's just an easier way of whittling it all down. That's kind of what it boils down to. You've been using 4-hour strategy for 4 years. It's been amazingly helpful. Still not trusting it doing bots like you guys do, but it's huge in protecting me. Yeah, I mean, you can just use it as a signal, right? You don't even have to trade it. You can use it as like a reason to want to be long, a reason to want to be short. There's a lot of different ways that you could utilize strategies that you find results on. Couldn't the system automatically find the best strategy parameters without user having to guess? Well, ultimately you have to input something, right? You can't, it won't just, if it doesn't have an input, then it's not going to find anything. So you have to input something. You have to input a set of strategies, or you have to input a set of tickers and a single strategy, or you have to input a ticker, a strategy, and a set of time frames. You have to start somewhere. So that means you have to have a strategy, and you have to have a ticker, and you have to have a time frame. It will not just check every single ticker, every time frame, every strategy, because although there are pre-built strategies in the platform for you, there are limitless amounts of strategies that could be built utilizing all of the indicators and price action and everything that's available in the platform that you can define. There is an unlimited amount of strategies that could be built. So it's not possible for the platform just to, you type in SPY and the platform tells you should do this on the SPY. No, that's not possible. That would be a pretty big, I don't even know if it's possible. I'm not a developer though, so I can't say. Maybe it is possible. But given a ticker and an EMA crossover strategy, couldn't it find the best EMAs to use and the best time frame? Again, up to 30 different permutations, right? So you could, if you build EMA crossovers for every single length of EMA that you can think of, up to 30 of them, you could test 30 different EMA crosses on the same name, on the same time frame. You could totally do that. I mean, out of those 30, you're going to find something of interest. I don't even know if, well, I don't know. I think I would be hard pressed to think of 30 well-known lengths to utilize on EMAs, or any moving average for that matter. But you could definitely just go totally random and pick random lengths. The 3 crossing the 9, the 5 crossing the 12, the 8 crossing the 15, the 20 crossing the 50, and anything in between, the 34 crossing the 78. Like, you could go wild and pick and create 30 of them if you wanted to, and then test all of them and just see. I would imagine there's probably some serious alpha in lengths that aren't common, right? We all know the 50 crossing the 200. We all know the 8 crossing the 21. We don't all know the 6 crossing the 19, right? Like, I don't know. And potentially there's something there, and you would just have to test it and see. You might be able to find something that works great, that is uncommon, but it's not pre-built, right? You would still have to build it. What's up, unstoppable person? Yeah, you still have to build it. So there is that, like, the platform can't do absolutely everything. It can't just make up a bunch of random crosses and test them for you. But you can take an hour or so and build a bunch of different strategies using a bunch of different lengths and go to town. And then you could test them in a bunch of different ways if you wanted. So anyway, getting back to dashboards. Dashboards, a really functional way of looking at a lot of things at once. That's really what what dashboards are all about. So you won't see the ones that I made on your side, but you will see this example dashboard. And when you open the example dashboard, you'll see something that looks very much like this. And here, what do we have here? We have an alerts panel with some charts. If we scroll down a little bit, we've got, let me check that. We've got a scanner here. We've got a scanner here. We've got another chart here. Dividend, this is what's happening now. Dividend information. Scroll down a little bit farther. You've got, what is this? Just like news, Benzinga news, no filters. Here's another random scanner. Below that, you've got unusual options widget. You've got another chart. You see where I'm going with this. Analyst estimates, insider trades. Scroll down farther, and you've got a couple of scanners. You got a scanner, a watch list here, and then another chart. So this is just kind of giving you a very, very basic idea of what's possible. You may not find any of what's here helpful to you personally, but it's just what you can do. So if we wanted to, we could like turn all this stuff off. I'm just gonna click and turn all this stuff off, and it's gonna jump my thing up for me. I can have up to 10 columns here. So let's just make this 4. We'll keep it really simple. So you see what it did. It brought my columns in, just to make it a little bit easier to read. But, you know, do whatever you want to here. Do whatever makes sense. You can add columns using, or add widgets to your rows here using this button or this button, wherever you want to put them, on the right or on the left-hand side. And when you click one of those buttons, one of those plus signs, it's going to give you all of the different items that you can add. So these are pretty much like widgets, right? Widgets like you're used to on the regular platform. They live on the right-hand side of the screen. So we can add charts, watch lists, alerts, bots, unusual options, news, insider trades, all that stuff from what's happening now that you're familiar with can be added here. And we could just go down the line and build things that make sense for us. And so that's why that's why we created a couple of ideas, you know, to kind of get your heads thinking in the direction. So this one we called the Magnificent Seven, and it is exactly what you would think it is. This thing shows us all the charts of the Mag 7, right? That's the first piece. If I want to zoom in on any of the charts, I can just click on that little crosshair up here to kind of zoom in and see what's going on with the chart. I can, you know, I can edit the chart, add indicators and things. If I want to, I can, well, rather below that. So I've got, you know, all of this is essentially a multi-symbol view, but just kind of pictured a different way. But this is just every chart in the Mag 7. So I can just kind of monitor what's going on with all of those 7 important names that I know everybody's paying lots of attention to. I can monitor everything here. But then underneath that, I've got unusual options and news widgets. And what I've done in those unusual options and news widgets, if I go to my filters here, I've added a filter for symbol, right? So if you go to add filter and choose symbol and say is any of, and then I've gone in and I've said Meta, Google, Amazon, Tesla, Microsoft, Apple, and NVIDIA, right? So I've specifically taken all of the unusual options information that's available in what's happening now. This is that unfiltered list, and I've filtered it by just the names in the Mag 7. So this is a up-to-date real-time list of everything that's coming in for just the Mag 7 in unusual options land. And if I wanted to, I could filter it even more. I could say, you know, just calls, maybe. I would say type, I would say is call. And so here's just the calls for all of the Mag 7 names. And then I've got news, and again, filtered the exact same way. Symbol is any of, and then all of those 7 names here. So again, just keeping me kind of, this is my Mag 7 dashboard. It's meant to allow me to track everything that's happening, but just with the 7 specific names, right? I don't care about what's going on everywhere else. I just care about what's going on with those 7 names. And I've added analyst estimates, insider trades, and earnings widgets to the bottom here. And again, I've filtered them the exact same way. So just go in for all of these widgets. Anytime you add a what's happening now widget, like analyst estimates or insider trades or unusual options or earnings, you would just want to click on the 3 dots, go to filter, add filter, and then you can filter these by whatever you want. And in this particular case, I've just filtered them all by the symbol, just to make sure all 7 symbols are in there. So this gives me a real-time view of what's going on with insider trades and what's going on with earnings, if there's any earnings news that I need to be aware of. Obviously, all these guys had earnings some time ago, so this panel is kind of not as important, but you know, with analyst estimates, has anything come in recently? What's going on in unusual options? Any news coming across the tape there? So that is one thought. Another thought that I had was the idea generator. And this one's pretty wild because this one is, this one's 15 scanners. So this is like, think of this like trade ideas, right? You're used to products like trade ideas where you can have a bunch of different scanners running at once. You guys see what's happening right here. All of my scanners are running. Now it's doing a ton of legwork here. So, you know, give it a minute. It's not going to give me like absolutely instant results, but these are all going to fill out and they're going to show me everything that's happening. So in the top here, I've got 5 of my own personal scans. These are top gainers and losers scans. So this is, above or 2% or more greater than previous day's close, 1% or more greater than the open today. We've got today's gainers, which is, I believe, 5%, anything that's above 5% today. You've got today's losers, and then price near 52-week high, and that's like a range scanner. So I can instantly see everything that I might be interested in, what's working today, what's up relative to the previous day's close, what's the top gainers, what's the top losers today. And I could see it all in one fell swoop if I want to. Here, I've got the pattern breakout, breakdown. So this is all of my favorite chart pattern setups. So falling wedge, breakout, descending channel, believe there's a breakout, I'm not sure. Any triangle break, ascending channel breakdown, and then rising wedge breakdown. Oh, this one's breakout and this one's breakdown. So a couple of different breakdown, breakout pattern scanners. And then below that, I've got divergence scanners. So MACD, RSI, Bollinger Bands, VWAP, reversal. Essentially, they're looking for divergences. Divergences sometimes lead to reversals. So we're looking for just a bunch of different divergences here. And then I could, you know, kind of see what's going on wherever, and I could pop back over to my main chart here. Hold on. So if I wanted to, wanted to check out one of these particular names, I could just go over to my main chart and type it in there and wham bam. If I wanted to, I could also add an additional row. So like a new labeled set of widgets, and I could just go to chart. And I could like look at the charts here within the dashboard if I wanted to. Sometimes it's just a little bit easier just to see all this stuff and then go to my main screen where everything looks how I want it to look and then just look there. But all right, we got some stuff coming in. Hold on, let's see. Can you share workspace setups across accounts? I wish we could. You cannot share them. There has been talk of being able to do that eventually, but unfortunately, it's not possible yet. I would love to be able to share these with you. It would definitely make things a little bit easier so you can kind of get... It just would be easier, but unfortunately, that's not possible yet. But as you can see, I've got a bunch of them up, right? So here's my fundamental fanboy. This is just, you know, for somebody who's like really interested in fundamentals. So recent EPS surprises, dividends news. This is an up-to-date list of all of those items. You got recent analyst buy upgrades, recent analyst sell downgrades. You've got analyst estimates here, and then charts for kind of checking out some of the names that are appearing in some of these lists. Like if I wanted to look at Dada here, this is the first name that's coming up on that scan. So just type it in and I can kind of see what's going on with it. Does it look like something that I'd be interested in? If it is, then I can pop over to my main chart and start doing some analysis on it if I wanted to. But these charts are just down here so that I can very quickly reference stuff that I'm finding within whatever lists that I'm looking at in my dashboard. Another thing that came with this, though, y'all, is the increase to the amount of workspaces that you can utilize. So now it's like 15. You can have 15 workspaces total. And you can have them all up at the same time. So if you're like me and you have a stupid amount of monitors, I've got 4 giant monitors surrounding me. And you wanted to have all of these different things. You want to have a dashboard over here, and you want to have your main chart over here, and you want to have your whatever, your idea generation, your set of scanners over here, and whatever over there. You can kind of have all this stuff spaced out. And you're probably used to that. You know, if you have an account with us, you're used to having multiple workspaces. Well, we've just increased the limits on how many workspaces you can have. And all of these things are kind of under the umbrella of workspaces, whether it be multi-symbol view or dashboards. So I believe it's up to 15 total things you can have open at one time. So lots of functionality there with what you can do with all of these different tools. So that's kind of dashboards. Any questions about dashboards other than what we got here? I do wish we could share them. That would be pretty awesome. Hopefully we'll be able to one of these days. Yeah, Michael, thanks, man. Glad you like it. Hopefully you find it useful and helpful for you. It's certainly cool for just keeping an eye on things, you know, just kind of keeping track. I really like this one. I think the idea generator is kind of like my favorite one. Or the idea of utilizing a dashboard for all of your scans is kind of my favorite way of utilizing them. I know there's lots of different things you can do, but just the idea of having so many different scanners up at once and being able to kind of see what's happening just across the board. Because you could think even further out with this, right? You could kind of like tighten up your scans to see, you know, kind of like where the strength is in the market. If you wanted to create scans around certain indexes, or, you know, certain strength scans for all of your major indexes, or certain weakness scans for all of your major indexes, it would be kind of like a heat map to some degree of like, well, I know I'm getting a ton of results on up 1% on the day, and I'm not getting any results on down 1% of the day in this particular index. It's going to tell you something about where the interest is. And, you know, you guys are probably familiar with how our scanners work. In order for a scanner to rerun, you just have to click that refresh icon there in the top left corner of it. Well, you've got a refresh icon here in the top left corner of your dashboard as well. So doing that, if you click that, well, it's not working. What's going on here? Oh, I see. Well, hold on. Ooh, I might have just found a bug. Interesting. I think I just found a bug. Because this should be... Let's try refreshing it and doing it again. Because this button right here, this refresh icon, should rerun all of my scanners at once. So maybe I just found a bug. Do the scans need to be manually refreshed one time? That was the thing I was trying to showcase, is that they don't. There's this refresh icon that should refresh all of them at once, or should rerun all of them at once. So let me hit up our dev real quick. Hold on one second. Give me 1 second. I'm just asking him right now. Interesting. Let me try something else here. Ah, so maybe I might be wrong here on this, y'all. Perhaps maybe the refresh icon only refreshes the auto analysis tools. I could be wrong about this. Maybe I didn't find a bug. Maybe I am the bug. Because it definitely works with refreshing the charts. But it's not working to refresh the scanners. Okay, I'm going to ask him about that, or I have just asked him about that, and I'll report back to you, Havarel, when I have a confirmed answer from him. Okay, so we are almost at an hour here. If anybody has any questions about anything, hit me with them. I'm going to show you guys one other thing real quick. Just going to our blog. On Saturday morning, we released these guys. This is analyst consensus and analyst reports indicators. And these are pretty cool. These are both custom scripted indicators. So they are not available immediately in your platform. You do have to upload them or import them to your account. They can be imported to your account via these links. Oh no, what the heck? Why am I not able to click? Oh, my computer's been doing this weird thing where it just does this. I will wait. Just like freezes up for no reason. I'm not sure why it's doing this. Maybe one of you guys viewing has an answer for me. I haven't been able to figure it out. Hold tight. There we go. Okay. There it is. All right. Let me go back. I want to make sure you guys see what's going on here. So you can import the indicators via these links. They are all the same links. They are available throughout the blog post. Ah, Safari, gross. No. Also, I'm on a PC, so I don't know if I could even use Safari. So click on either of these, and you can log in and import. I actually don't think I've imported these to my personal account, so I will go ahead and do that so that you can see it. So you click subscribe, click here to open it, and then it opens it. So this is the analyst consensus indicator, and what this is, this shows me kind of where analysts' heads are at for a particular name. I'm going to go to SMCI because this is the one that I kind of highlight on the blog post. This is pretty interesting, actually. You've got, let me add earnings here. Let's bring it to the daily. Turn this off. All right, so with analyst consensus, this is giving me a view of buy, hold, sell ratings. There are two different colors of red, there are two different colors of green, and then there is gray. Because this is a consensus indicator, we wanted to delineate when a particular analyst, when analysts have a consensus about something. So you can see this thing looks back about a year, and a year ago on SMCI, the analyst consensus, 100% consensus, was a sell rating on SMCI. You had this earnings report in May of last year. Something was announced during this earnings report in May of last year that caused the analysts to kind of start changing their mind about things. So immediately you have this earnings report, analysts change their ratings. And so you've got some light green, you've got some dark red, and you've got some gray. So some analysts, some of these guys who were all saying it was a sell, some of them switched to a hold, and some of them switched to a buy. Sell remained the consensus. It took up more than 50%, so it remained the consensus. Or maybe it didn't take up more than 50%, but it was more than the other ones. And that remained the case. pretty much for the whole quarter. Well, about half the quarter. And then about halfway into the quarter, we had some more buy ratings come in. And it looks like your hold ratings actually decreased. So then you assume that maybe one of these guys who was saying it was a hold changed to a buy. And then some of these guys who were saying it was a sell changed to a buy as well, because the buy, the amount of area increased. And sell lost its consensus reading. Well, by the 3 quarters into that quarter, not even before the next earnings report though, you had a buy consensus here, right? Your green, your light green changed to dark green, and so now you have a buy consensus. So within just like, 2 months or something, this went from like 100% sell consensus to buy consensus. It wasn't 100%, but it was still, that's a huge change of trend in just several months' time. And then, as time has gone on, as this thing has consolidated for months and months, or as it consolidated over the next 2 quarters, those buy ratings continued to increase. The sell ratings continued to decrease. And, hold ratings increased a little bit for a period and then kind of started to decline. But those buy ratings just kind of continued to increase really up until now. And just over the past couple of weeks, we've started seeing that the hold ratings are back on the uptick. So people who were bullish said it was a buy, probably switching sides a little bit and going, all right, hold on. Now let's not get ahead of our skis here. Let's hold this thing, but let's not call it a buy. And the reason why I utilize this ticker is because this is a very clear change of pace, right? A very clear change of direction out of those analysts. And analysts, some people like to give the analysts a hard time, but analysts are smart people. These are experts in their field. They talk to management. They have models. These are bright minds that are making these calls. So when you have a field of analysts completely reversing their tone on a stock, it's worth noting. And I haven't done enough research to say that this period of time is a short period of time or a long period of time for that whole perspective to change, but it seems like a pretty short period of time, just a couple of months from 100% sell to buy being the consensus. So this indicator is cool for kind of visualizing that, if there's something out there, you got, like GME, I believe is all red. Yeah. So like if at some point down the road, I'm not saying this is going to happen, but if some point down the road, you start seeing buy ratings come in out of nowhere, it might be a sign, hey, something's changing here. Or if you've got something that's all green, like I think Costco's all green. Yeah, it's pretty much green. So like if you started seeing some sell ratings coming in here, maybe you start seeing sell overtake buy. I'm not saying it's going to happen. I'm just saying like if you saw it, this would be a really interesting way of visualizing all of that. If you've utilized our platform before, if you've utilized the analyst estimates tool within the platform, you're probably familiar with the visualization of what analysts are saying about a stock. This is just a new way of visualizing it. And I think this is kind of like the cleanest, most efficient way to see it. It just kind of makes the most sense. There is a secondary indicator there. I saw a couple things came in. Hold on. Daily stock picks. You follow this one and think there were only 2 analysts back in May. It's crazy, right? Is there a way to see how many analysts in this? I would say you could probably I would just go to the analyst indicator. Where's that? Gosh, why am I missing it? Right here. So this is going to give you a breakdown of everyone. Right here. At that time, there was a huge increase in the amount of analysts. Trade futures, you took a short this morning on gold using TrendSpider. How would I find this opportunity to scalp? Well, it depends. Love cars. I'd have to know a little bit more about kind of like why you took the short. So maybe you could explain to me why you took it. Because you could definitely utilize the scanner to find setups. You could utilize alerts to be alerted on those setups that you find. But without knowing why you're looking, it would be hard to, or without knowing why you took the short to begin with, it'd be hard to direct you as to how to do it on TrendSpider. So let me know on that. The last piece here, where's it at? I must have, all right, let's go back. The analyst reports indicator. So the analyst reports indicator is going to print analyst actions directly onto the chart. So every time that there is an analyst buy rating or sell rating, you're going to have, let me zoom in here a little bit so you can kind of see it a little better. You're going to have a green box above the candle on which there was the buy rating. You're going to have a red box underneath the candle on which there was the sell rating. You're going to have a number in there that tells you how many buy ratings or sell ratings there are. And then there's also upgrades and downgrades. Zoom in here. You'll notice this candle right here is purple. That means that there was a analyst downgrade, straight up downgrade. And then every once in a while, you'll see orange candles. Let's see if I can find, there's one. Actually, maybe it's the opposite. Maybe, let me make sure I got this right. Yeah, okay, upgrade. Sorry, purple is upgrade, orange is downgrade. If you're curious about colors, you can always look in the code of the custom indicator. You just kind of gotta read through it and find where it talks about those colors. So here's purple, here's orange. So purple upgrade, orange downgrade. So there's your orange candle there. It's kind of hard to see, but it is there. And there's your downgrade to go along with it. And then you've got your upgrade here in purple. Is it possible to see more than 1 year of analyst estimates on the chart? It is not. That data goes back 1 year. Love cars. What were you looking for on gold? What time frame were you looking for it on? Like, talk to me. I know this thing's getting really close to breaking out here, huh? Oh, it did. I guess on Friday. Interesting. We are coming into my final amount of time here today. I do have a lot going on today, so I got to get back to the regular day job. But yeah, Love Cars, if you want to let me know what it is specifically that you're looking for, we could talk through scripting it really quick. $8:30 a.m. looking for a fib break, a 2180 fib break. So when it comes to fibs, man, it's really fibs are it's not possible to define fibs in your as like a criteria that you can scan for. So what you could do, there's a couple of different things. Let me show you this real quick. So I'm just going to turn all this stuff. So you've got this auto fib Drawing tool, which is going to draw a fib sequence on the most recently completed move per the time frame. Depending on the time frame that you're trading, it may draw the fib on where you see it, and it may not draw the fib where you see it. It just depends. It's drawing it based off of the swings. So, here on the daily, you've got this fib sequence. The most recently completed move was this February high, swing high, down to this February 14th swing low. And because it's tracking a down move, it's going to measure the fibs to the upside. So you can try utilizing that auto fib if you want to. You could also utilize just the hand-drawn fib drawing tool and draw your own wherever it makes sense for you, however you see it. I don't know where you had that fib drawn. We want to reverse this here. Again, I don't know where you had that fib drawn, but let's do like a 1.5 and see. No, let's say 1.236. Let's say 1.382. I'm just thinking about where you might have had a fib break. So here's a fib, 1.382 from the swing high down to this low. I doubt this is what you saw, but this is just an example. So what I would say is if you have a fib drawn and you want to be alerted on a break of it, just right click on that fib level and then say create alert at line. And then you have to define the type of trigger for all of your alerts in TrendSpider. You have to define whether it's a breakthrough, a touch, or a bounce. These are 3 unique instances. Breakthroughs are not touches, and touches are not bounces. They are all different. And so I would encourage you to read the description on each of these to understand the difference between the 3 so that you're not being, so that you're only being alerted if you actually want to be alerted. If you want to be alerted on specifically a breakthrough is where you would be opening and closing on opposite sides of the line. Then just select a breakthrough. If you want to be alerted on a bounce, meaning you've kind of like come within range of the line or you've touched the line, but you didn't close on the opposite side of it, and then you opened and closed on the same side, that would be like a bounce, right? Different triggers have different definitions. Just make sure you know that. But choose your trigger. You could choose your sensitivity. Sensitivity is the area around the line or the indicator or whatever that the alert will fire within. So, if you need price to like absolutely break through or bounce off of the line itself or the indicator, then you could just turn the sensitivity completely off. If you're okay with price coming within range of by X amount of points in this particular case, or by X amount of dollars or cents in the case of a stock, then you can increase the sensitivity. You've got the confirmation candle. This is the time frame upon which you will receive the alert. Since we're on the daily chart here, you can get an alert down to the 10-minute time frame. If we were on anything below the daily, if we were on like the 4-hour or lower, you could get an alert down to the 5-minute time frame. And that alert will go off when these conditions are met, whether it's bounce, breakthrough, or touch. And again, you can have all these selected if you want to. You can have just 2 of them selected. You can have just 1 of them, but you do have to pick a trigger. And then choose how long you want that alert to live in your system, up to, I'm not exactly sure what the max, I think it's 90 days. And then how many times you want to be triggered on it. So like, if it's an important fib, maybe price might break through it a couple times before deciding a direction. You can choose multiple triggers, meaning if it breaks through today, you get an alert. If it breaks through again tomorrow, you're going to get the alert again. If it breaks through again at the end of the week, you'll get another alert. So it'll live in your system for 90 days or up to 4 triggers, whatever comes first. And then create the alert. And so now that fib level alert is there, and you'll just be notified when price gets there. Unfortunately, because fibs they're always moving, right? If you utilize like the auto fib drawing tool, it's going to reposition itself every single time a new set of criteria meets its definition, right? Every time there's a new swing completes, it's going to jump. So it's not possible to just say the 0.5 fib alert me when price breaks through the 0.5 fib, because it doesn't know where you're drawing the fib from, right? The platform has no way of knowing. So I think the best thing that you could do, love cars, in this particular instance, is to draw your fibs wherever you see them, and then just create alerts on the fib lines. Does that help you? Hopefully that helps you a little bit. It sounds like it's not exactly what you're hoping for, but closest thing that we can do. There are, though, kind of interesting, like if I were to do this, if I were to create an anchored view app, let me show you this. Handful of indicators have it. But like on anchored view apps, you can use fib bands, percentage bands, which you could define as fibs. Yeah, okay, cool. All right, y'all. Well, my time has come and gone, so I'm going to get to stepping on out of here. It's been a pleasure to get to be back here hanging out with y'all again. If you enjoyed this show and you want me to continue doing these, please subscribe to the channel, like the channel, and put some notifications on. That way you'll know every single time I'm live. I try to go live for these 2 or 3 times a week, so I'm going to plan on being here again on Wednesday. That's kind of the goal. And, you know, today was a little bit different than normal since we had a bunch of things that we've updated, a bunch of changes that we made to the platform. I wanted to make sure to go over some of those things with y'all. But normally I just hang out and I answer questions. So for everybody who's tuned in, I see a handful of people that I've never seen here before. So first of all, thank you guys for tuning in. Really appreciate it. And just know that, you know, these shows are all about you guys. So if y'all have questions, that's what I'm here to do. I'm here to answer those questions, help you learn how to utilize the platform a little bit better. So please participate, speak up. If you're curious about something, you want to learn more about something, just write it in the chat. Let me know. I'm an open book. I'm happy to help however I can. If you guys need me in between now and then, you can always hit me up on Twitter. I am at Krutzky Trades. And yeah, I will be back again on Wednesday, probably, to do another one of these. I'm not sure what time it'll start, sometime in the morning. Oh, Haverel, let me tell you, I just heard back from our developer and I was wrong. So I apologize. I told you the wrong information. That refresh button in the upper right hand corner here, this is only for charts. It's for auto analysis tools. So your trend lines, your auto fibs, your auto chart patterns, all that stuff. Anything that's auto analysis, that's what this refresh button refreshes. So idea generator, yeah, you got to go in and unfortunately you got to click the refresh button manually. So that's maybe a little bit of a bummer, but you can see pretty quick and easy to do. Not too hard. I've just refreshed all 15 of them in like 5 seconds. So, yeah, that's that. All right, y'all. Thank you again for being here with me. I really do appreciate. Again, if you enjoyed the show, please like and subscribe to the channel. All the likes and subscribes actually do really help me. They let the team know that you guys care about these things. So, yeah, thanks for being here. It's been a pleasure. And I will see you guys all again real soon. All right, cool. Take care. Bye.